Welcome to the Community Corner podcast, where we analyze S500 companies through the lens of behavioral finance. I'm Arnav.
And I'm Nikhil. Today, we're focusing on Arch Capital Group Limited, a leading global insurance and reinsurance company. We'll explore how behavioral finance principles impact their decision-making, their approach to DEI, market adaptation, and how they compare to other companies in the insurance and reinsurance sector. Let's dive in.
Arch Capital Group operates in the insurance and reinsurance industry, which is highly affected by risk and uncertainty. How do biases like loss aversion and risk-seeking behavior influence their strategies?
Loss aversion, where individuals prefer to avoid losses rather than acquiring equivalent gains, can affect Arch Capital's decision-making. This might lead them to be more conservative in their risk assessments and underwriting practices to avoid potential losses, which can influence their overall strategy and profitability. Risk-seeking behavior, on the other hand, might drive Arch Capital to explore high-risk, high-reward opportunities in the market. This can lead to innovative insurance products and reinsurance solutions, but also involves navigating the associated risks.
Managing these biases is crucial for Arch Capital to balance risk and reward effectively and maintain a robust portfolio.
Exactly. By addressing these biases, Arch Capital can make more informed and balanced decisions in their insurance and reinsurance operations.
Let's discuss DEI at Arch Capital Group. How does their approach to diversity, equity, and inclusion intersect with behavioral finance principles?
DEI is essential for Arch Capital in fostering a diverse and inclusive workplace, which can enhance innovation and employee satisfaction. From a behavioral finance perspective, strong DEI initiatives can improve team dynamics and decision-making by incorporating diverse viewpoints and reducing grouping. For investors, Arch Capital's commitment to DEI reflects positively on their corporate values and social responsibility, potentially increasing investor confidence and aligning with ethical investment criteria.
Investors increasingly view DEI as a key component of a company's long-term success and ethical standing.
That's right. Arch Capital's DEI efforts contribute to a more dynamic and inclusive organization.
Moving on to market adaptation, how does Arch Capital adapt to changes in the insurance and reinsurance industry, and what role does behavioral finance play in this?
Arch Capital adapts by responding to evolving market conditions, regulatory changes, and emerging risks. Behavioral finance helps them understand market trends and consumer behavior, allowing them to adjust their strategies and develop innovative insurance and reinsurance solutions. For example, insights from behavioral finance can help Arch Capital anticipate shifts in risk perceptions and adapt their product offerings accordingly.
Adaptability is key for Arch Capital to stay competitive and responsive to industry changes.
Exactly. By leveraging behavioral finance insights, Arch Capital can enhance their strategic planning and market positioning.
Now, let's compare Arch Capital to other companies in the insurance sector, such as Aon and Marsh McLennan. How do the behavioral finance dynamics differ?
Arch Capital, Aon, and Marsh McLennan each face unique behavioral finance dynamics based on their market positioning and business models. Aon and Marsh McLennan might experience different biases and market pressures compared to Arch Capital, depending on their specific focus and services offered. Each company's approach to risk management, market adaptation, and client engagement varies based on their strategic goals and industry trends. Behavioral finance insights help understand how these factors influence their strategies and investor perceptions.
Each insurance and reinsurance company has distinct behavioral finance dynamics that impact their market performance and investor appeal.
Absolutely. Analyzing these dynamics helps investors assess each company's strengths and risks in the sector.
To sum up, Arch Capital's strategies are influenced by behavioral finance principles, whether through managing biases in decision-making, DEI initiatives, or market adaptation. These factors collectively impact their market performance and competitive positioning.
That's right. By understanding these dynamics, Arch Capital can better navigate the complexities of the insurance and reinsurance industry.
Thanks for joining us on this episode of the Community Corner podcast. Until next time, I'm Arnav.
And I'm Nikhil. Stay curious and keep questioning the narratives.